for consumers in whichever channel they choose to shop.
Startling stat John just hit about a week ago that consumer confidence, the second lowest level since 1952. I mean, I wasn't even a thought, John. Like I was out there. Maybe my parents were out there to eat spear or something. I mean, in this back, are you seeing consumers trade down? And then I look at the results in the fabric care business, and they were flat. Not only are they trading down, but also adding a little extra water to their tide to make it to the end of the week.
So we're not, it's encouraging down. If we look at private label shares as a proxy for trade down in North America, they're down. In Europe, portfolios, we don't see a lot of trade down. In fact, the fastest growing portion of our portfolio is typically the premium end, where performance is best, and we operate in categories where performance drives brand choice, so that makes sense. What we are seeing, the second part of your question, is reduction in consumption. And we have these wired homes with consumers where we can track exactly what's happening in the laundry room, for example. How many loads are done per week? What temperature are those loads done at, et cetera. And what you see is a reduction in the number of loads that are done per week currently. Going from about, if you go all the way back pre-COVID, to about 5 loads per week to now about 3.5. So that's what's driving the slower market growth, still growing, but at a slower rate. But there are many opportunities within that, the light and the result from that job, ensuring that dosing is adequate to deliver the result the consumer is looking for, et cetera. So as I mentioned, we're going to continue to innovate, to ensure that we have products that are not only fit for use, but create delight in use in the current stressful environment.
Well, for what it's worth, John, if my home was wired, it would show that I'm still using the same amount of Tide to clean my underwear and socks. I mean, I'm skewing the data here, John. I'm skewing it for you. Good to get some time with you. I appreciate these truthful answers to these questions. I know challenging times for a lot of CEOs and a lot of big companies. And
at Grand Canyon University, we believe in equal opportunity, and the American dream starts with purpose. By honoring your sacred vocation of education, you impact your family, your friends, and your community. From teaching pre-K through 12th grade students to educational administration, GCU University. Visit gcu.edu. Initial teacher licensure programs are not available in Kentucky.
There's no papers, tests, or anything. You have to experience it to learn it.
Modern look. Thick, absorbent layers. But these napkins aren't just elegant, they're surprisingly affordable. And perfect for Wing Wednesday. Vanity Fair. Elevate every day.
Drive home happiness in the new Kia Sportage from Bald Hill Kia. Right now, lease a new 2025 Kia Sportage for $299 a month or get financing as low as 1.9%.
I'm going to eat something.
Other vehicles available. Discover the Bald Hill Kia difference today.
Makes expectations in its first quarter results as the chain navigated lower consumer confidence and President Trump's trade war. Joining me now is Chipotle CEO Scott Boatwright. Scott, thanks so much for coming on.
Hi, Brooke, and thanks for having us on today.
Scott, let's just set the scene here. The Conference Board's Consumer Confidence Index showed that consumers' expectations about the economy hit a 12-year low. The IMF lowered its expectations for U.S. growth, and all major indices are down roughly 2% this month, if not more. Is all this noise what led to a major slowdown in same-store sales growth for Chipotle?
We certainly think so, Brooke, in large part. We saw the underlying kind of trend step down around the February timeframe. That continued into March for us. As we look at our consumer visitation study, we talk to consumers broadly about what is causing them to be on the sideline of this economy. It's really trying to save money, uncertainty around what's going on with the global economy. Certainly, concerns around eating out more or eating at home more often versus eating out. As we dig into specifically what's going on with the Chipotle consumer, we're not seeing a loss of customers. What we are seeing is a convenience challenge, meaning we need to build more restaurants as quickly as we can to get to our 7,000 restaurants in North America.
Now, Goldman Sachs wrote in a note this week that as tariffs go into effect and consumers start to see prices rise on everyday goods, that it now expects growth to slow down from there. A bowl of guacamole, my go-to order, half premium, it costs about $15 here in New York. How does Chipotle compete in this sort of environment as more consumers are turning to fast food?
Chipotle today, the average cost of a chicken burrito or a chicken bowl is still under $10 nationally, Brooke, which we think is still an extraordinary value compared to our peer group. We are a 10 to 20% discount to QSR today, and oftentimes a 10 to 20% discount to our fast casual peer group. So we think about value differently. We think about value as really high quality ingredients delivered with great classic culinary techniques in abundance and an affordability and a price point that is unmatched.
But Scott, we did see foot traffic drop 2.3%. That was the first decline since 2022. Is that enough to get consumers back in the door here?
We believe so, Brooke. And so we're going against some really tough compares this quarter, as you probably well know. Weather has been a challenge for us in the first quarter. The shift of Easter moving 3 weeks later in the year is a challenge for us. Typically, we see the boom or the boost of burrito season happens right after the Easter holiday, which we did see a nice pop in our business on Monday following the Easter holiday. So it gives us a lot of confidence that our strategy is working. We're meeting the consumer where we are. Given we took a look at our brand tracker with targets, I'm happy to report we hit a record 15 top 3 categories this year, which shows us that we're improving. 2 that I'm most excited about is customer service. We showed up in the top 3 of those categories for the first time.
Scott, are consumers pulling back on ordering sides?
No, we're not seeing side attachment per se drop. What we are seeing is the frequency drop. So consumers are still spending. They're still getting their favorite side, their add-ons, whether that's guac or a delicious queso or chips. Our chips are handmade every day in the restaurant. They're still an incredible value as we see them. So we're not seeing attachment slip. We're just seeing frequency of our customer. Again, we don't have a customer issue. We have a frequency challenge.
I do want to talk about that guacamole. We did see food costs increase during this quarter for Chipotle due to inflation. We know that about 50% of Chipotle's avocados are sourced from Mexico, of course, exempt right now with a USMCA agreement. But there's so much uncertainty day to day. Will consumers see higher prices for guacamole?
Not anytime in the near future, Brooke. Our position today, as it stands, I said this earlier in the year, is that we are not going to take price in this environment, given where the consumer is, until we understand what's actually happening with tariffs. We need to understand which components of the tariffs today will be transitory, which will be permanent, and we'll take a pricing action when it's right and appropriate, Brooke, but it is not in our purview today and not on our radar anytime in the near future.
Your CFO did tell investors last quarter that if there was a permanent hit to the business this year in the form of inflation,
can you see my screen?
Consider pricing. It sounds like potential pricing is still on the business. And do you raise prices?
We would have
Let me know in the chat. Can you see my screen?
That actually happens, and we understand the tariff impact. Once we have that understanding, we'll take a hard look at where the consumer sits today. We have pricing power at Chipotle that I believe is unparalleled. And we view that pricing power as an asset. And we can choose to spend that asset when we want to, given the strength of our balance sheet and the strength of our economic model that gives us the opportunity to be patient, do what's right for the consumer, do what's right for the brand, and make those decisions at that moment.
So Scott, to be clear, even though you did see same-store sales decline, you did see foot traffic decline, you still think that Chipotle has pricing power here?
All right, fantastic.
I absolutely do. As it relates to our competitors within the space and how we think
shit.
about pricing in total. I know many of the brands that are competitors within our space have franchise communities that take action on pricing at will. We, being wholly owned and company owned, both here and in Western Europe, control our pricing
All right.
strategy. We control how we create value for the consumer, and we don't take that lightly.
So-
We lean into the right decision and the right action.
First shot,
In my go-to order here,
that arrow is the measure move of that flag.
So.
It's small numbers and basis as it relates to basis points.
You can look at it as a flag. You can look at that as a cup and handle. There's a couple things going on there. But, and this is the weekly. So this is a swing. This is obviously a big move. Okay. If you're going to take it. I know we like our quick money, but this chart is beautiful.
Looking out, you do expect same-store sales growth to now come in the low single digits.
So you got a quadruple bottom. 1, 2, 3, 4. I already lined it out. I want you to see the inverse head and shoulders clearer as well. And this double bottom. So you got your inverse head and shoulders. And then you also have this double bottom. All right, so now that we're on the hourly, what am I going to do? Oh, I am going to obviously move this resistance up. Okay, so that would also be the inverse head and shoulder neckline. All right, so we doing lessons and we charting. Okay, you could have gotten in off this double bottom neckline, 49.38. Wrote it up, but that's not worth it. It's not worth the risk to reward. You want to wait for a full candle close, an hourly candle close above this resistance before you hop in. Okay? Full hour candle close. Let's look at Google. All right. So on Google, all right, I'm gonna make this full screen for myself. Look in the. So you got Google. You got this double bottom, obviously. Boom, boom. All right. You have this strong. This is a strong point right here that we broke. All right. As you can tell, because you got 1 tap, 2, 3, 4. So what I'm thinking is we're going to see how it reacts to these areas. So far, I believe. So say you got in here, right? Let's take these off because I already shared it. I don't need these. Say you got in here. This is what when we talk about adding, and it broke this support. Because it's such a move, we would have a few weeks on our contracts, and our strikes would be a little higher. Okay, so we wouldn't be doing 163 strikes here. We would do 165s. If you want the whole move, maybe a 170. But that's a stretch. I would do like 165. So it would. I'm thinking it's probably going to bounce here. But if it doesn't and it breaks here, we got the 20 and the 200. Also, 1, 2, 3, 4 tabs. So that's another area that's strong. Our EMAs are all curling up. They're all pointing up. So that's letting us know that we're good for some upside. And this is why I say, keep it simple. 9 different, confirmation indicators. By the time you look at all of them, you're going to miss your entry. You're going to miss the trade, and you're going to be watching it do what it do. Simple. What's our pattern? Double bottom pattern. Where's our neckline? Right here. Where's another possible spot I could go to? Right here. So even if we got in here, we would just add here. What are our EMAs doing? Curling up. Are we above all of them? Yes. Our 200, our 20. So we're above all of those. Will it retest it? Possibly. Are we going to get out the trade? No. If anything, we might just add more down here. Boom. Unless it's bad news. If it's like, then you don't want to catch that knife. But if price action just plays out as normal, that's what you do, okay? Keep it simple. You make it complicated, it becomes complicated. See, on the 30-minute, we came down, tapped that 20 EMA. The 20s crossed all of our EMAs. The 200. They're all pointed up still. So again, I'm thinking right here. But I would go in with, say, half my position. 60% of my position. And then if we broke support, then I'd add the rest of my position down here. If we continue going up, I'd add the rest of my position here. Bang. You know what I'm saying? So that's a quick, even if you just want to scalp, boom, quick move. But what we want, because this is really like on the daily, what we want is up here. All right, let's look at it. What are our EMAs starting to do on the daily? Curl up. Curl up. The 200 is now crossing all our EMAs. Once it crosses this bad boy, it's gone. But what do we want? We want some up here. This is a double bottom on the daily. All right. Not on the hourly. This is a large time frame. So once we bust through up here, see, when I chart, I'm going over this stuff for myself as well as y'all. We're going to do this together. But this is a daily double bottom. We want some up here. We want 175. We want a runner to run up here. You feel me? We want a runner to run up here. 171. We'll take the $2 move, but we want a runner up here. Okay. So that's Google. Let me see if you guys. So that's Google. All right. I'm gonna look at the mag charts first. No, 2 I got. Amazon. Same thing on Amazon. Look at that. Look at that. Daily double bottom. All right. Let's bust it down on the hourly. All right, let's bust it down to the hourly. The class is in session. What I'm about to show you. Do you see the things that I see? Let's see if you do. What do y'all see? There's 2 things in here. Pattern now that I like. And I'm not talking about this inverse head and shoulder because it already played out. There's 2 patterns in here that haven't played out yet. We all got chat. There's 2 patterns here. I can't see how many people are on here, so it could be 2, it could be 1, it could be none. But I'm going through my charts. So we got a double bottom. Actually, more than that. It's more like a 1, 2 triple bottom. All right. We also have an inverse shoulder, head, shoulder. Why? Because the neckline's right there. which we have broken. Boom, look at that. All right, look at that. So we can just move this John up, even though it was official. Okay, 1, 2, 3 taps. We can now probably move this John up here. This one's official too. This is right here. So with Amazon, oh shit.
Podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. The podcast will make you.
So if you're playing the inverse head and shoulder,
I'm your host, Derek Blickery. Welcome to Financial Freestyle.
Boom.
Hi, I'm Bob Powell, and welcome to the
your entry was right there. Look at how that candle, this candle right here, would have bounced off that support.
Welcome to Yahoo Finance.
All right. So you can target here, 197 from 188. That's a move. All right, 197, or you can boom swing it, 205. That's what I'm going for. Yep, that's what I want. If I take that trade, because I'm in a few other trades, but if I take that trade, that's what I want. 205. All right. Yep, teeter, double bottom. Like I said, this is why this was such a solid one for me. I would wait for it to break this one, to be honest, at 191. I mean, I'm not going to tell y'all to do that. I would do exactly what I said. It breaks this zone. Okay, wait until it breaks this zone. All right, if you hear me, sometimes I say it's zones. So, where's the shapes and shit on here? I always do this on my phone.
Power Crunch Protein Crisps. The high protein potato crisp.
There we go. So this is why I say it's zones.
To fuel you and your day. Power Crunch Protein Crisps. Protein worth craving.
So when you hear me, if you hear me on Trading Analytics, and I'm like, it didn't break my zone, this is what I mean by zones. And you can clearly see why I say it's zones. All right, you can clearly see why I say it's zones. Came in, came in, came in, came in, went up and down and came in. But you see how it came up. So say I just had a line there. They would have just faked me out. I would have went in calls and it would have got smacked down. But, they would have faked me out right here. Because I would have got it in like the 15. So that's why I say it's zones. Just be patient. It'll break this zone. And some people are like, look, but that's 190, 250. That's a $3.50. Who cares? Who cares? This is $3.50. You can't wait $3.50 for a $12 move. You know what I'm saying? Get it together. Get it together. All right. So Amazon. Ooh, damn. Now I just went over that. Like, whew, that chart is gorgeous. All right. PayPal. Patterns. Let's learn some patterns. My lives will always be lessons. They will always come with lessons. Triple bottom. Bung, bung, bung. Broke it. Necklines. Broken. 200 EMA. Broken. All EMAs curling up. Let's go. Resistance up here. Gap right here. Let's go. Why would we take this? I'm going to show you why we would take this. Ascending triangle. All right. If he was scalping, this would be the measured move. But since we're not scalping, we want this. Bang. We want a little more. We want a little higher. But I like that pattern. So, peel some off, peel some off, peel some off. I really like that pattern. All right. Let's see what the daily looks like. The daily. All right. Look, our next EMA, we broke the 20. Our 50's all the way up here. You feel me? So, and 200 cross, boom. Our EMA is starting to curl a little bit. So, that's another move. Look at that resistance. Bam, bam. So, how many taps? 1, 2, 3, 4, 5. So, that's a solid one. All right. So, that's a quick little move up. On PayPal, one of my favorite joints, Rivian, because I hit on Rivian every day. I'm not even exaggerating. For the last week, every day. All right, my little scalp. So, Rivian, similar situation, and I got a partial fill. I got 1 out of 10 contracts on this. I went in calls, and I was holding over the weekend for this. All right, but multiple, bang, 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 multiple taps down here. We held. Look, we hold. This is the range. Boom, boom. See the range? See the range? Okay, so you see the range. We broke this. Boom. What was my pattern? I know there was a pattern that made me get in because I love my patterns. Double bottom, fair value gap. It dipped in. I'll teach y'all about those some other time, but it dipped in. So it's like we going to war, and they came back to grab some more soldiers to keep warring with the sellers. The callers got to grab some more soldiers, you heard, and keep warring with the sellers. But I love Rivian. We do Rivian calls. It's going to be a good, it's an American company. They get stuff, made in America, so it's a car company. XYZ. Well, we could go over XYZ. Block. All right. See, that head and shoulders, boom, played out. Now, and reverse head and shoulders. Boom, boom, boom. Put a line here. And look, and this is how the market will fake you out, because you'll be like, oh, that's an inverse head and shoulder. You'll be like, it broke its trend line. Yeah, it broke it, then came right back down, grabbed some more soldiers, and then went right back up. But you got a double bottom here. Okay? Let's get that out of there. Double bottom, boom, triple bottom, actually, 1, 2, 3, yep, triple bottom, boom, boom, boom. Neckline, broke, hit this resistance. As you can see, it was a good resistance. Came back down, retested the neckline, and back up higher. All right, so I'm thinking right here, 62 and some change, 62.50. 62.50, maybe a little higher. And you see how I talk about zones? Another lesson on zones, all right? Another lesson. This is why you get faked out. This is why you don't hold. This is why you like, damn, I was in it and I got out because I thought I was going to be a loser and it ended up being a winner. You see the zone. And you can find them on the hourly, the daily. But I like the hourly. All right, look. Came in the zone. Came in the zone. Came in the zone. In the zone. If I had just a line there, it would have broke. We would have got in calls and got smoked. Smoked. Okay? Zones. If it doesn't break your zone, you stay in the play. So that's XYZ to the upside. I feel bad for the people that are missing this because they just missed a free course. They just missed a free course in patterns and zones and, zones. Right here would be a zone. Let me show you why. It would be one of your zones. And sometimes regular lines work. See, it would have worked here. Right there, it would have worked. But you want to work across the board. So your zone's somewhere like
Chief Investment Officer Krishna, great to have you on. I know that you don't buy the thesis that somehow foreign equities are going.
And sometimes the zones are big.
Here. So what should investors do then?
Sometimes the zones are big. Boom, 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 boom. Came up in here, boom. See what I'm saying? If we just had a line here, it would have faked us out. We'd have been like, oh, the head and shoulders, the double bottom is going. It broke the neckline. Faked out. Stopped out here. Came right back up. So your trade would have played out. But you would have got out. Zones. And you can see them. There's another one down here. Look, but they be big. Boom. That's a big, big zone. But that's just what it is. See, some people like, I want the exact bottom. You don't need the exact bottom. Have your zones. It came from up here, went down here, went back up, came down somewhat, but back up, but still back down, then back up, then halfway again. Now it's gone. It's coming up here. 235. It's a $10 move. Okay? On low. All right, so that's all the charts I want to go over. I could go over CCL too, actually. No, that's enough charts, I think. It's not good to overwhelm yourself in charts. You only really need, 4 or 5, and then you pick your top 2 or 3 for the day. And sometimes you might have to hold them overnight. Well, you usually are, because we're not doing baby moves no more. I used to go in for little quick scalps and stuff like that, but then I take 5, 7 trades. I'm not doing that no more. If it doesn't break my zone, I'm staying. And think about it. If you got inputs here, we would have got out because it shot down. But say you didn't. It didn't break your zone. You stayed in. You see what I'm saying? It came back up. Great. Puts here. Boom. Out. Come back up. You might have missed it. There's a little zone here. But say it broke this low, so you got back in. Boom. Higher low. Higher low. Right? Came back up. Boom. You could did puts again. Came back up. Boom. You could did puts again. Came back up. Boom. You see what I'm saying? Calls. So this is why sometimes I tell you guys just watch one stock. Because I watch Rivian. And yeah, I be hitting on that thing. So if there's any charts you want to go and trade, I don't know. Any charts you want to look over. I have to be saved. Any charts you guys want to go over? Oh, it's just teeter. 35 minutes. All right, my man. Well, you have a good night. I'm glad you joined the live. I'm glad we hit 50 so I can finally do it. Yeah, man. I hope they help. And have a good night. We'll be back at it. I'm gonna start doing these on the regular.
It's about 19 right now. That is below the 5-year average, but still above the 10-year average. We had kind of a two-pronged hit to the market coming into, of course, this most recent.
Appreciate it. The sound was good. Everything was good. We don't take breaks. Bet. All right. Good night. How do you do stuff?
Areas where
And that's
more
that.
investors start picking and choosing some of the categorical winners.
Pop out dashboard. What's
So
that?
if you look at the equal weighted index and you look at the valuation of the equal weighted index, it is much better than your overall market. So your point is a good one. The sell-off is not just tariffs; it's about valuations of certain sectors in the market. So I think from a valuation standpoint, we are still high.
Okay, that's
but
cool.
not as
What
high
about the
as we have
side?
been
Oh, you already hit that.
As you said, 10 years.
What is
probably
this?
Even longer
Feedback.
from a valuation standpoint. So
You.
the downside,
Yes,
even in a
man.
recession scenario, is limited. You know, if we were at 6,500, or let's say 61, 6,200, going to 4,800 is not going to be very painful. Now that we are at close to 5,200, the downside in S&P is probably more like 4,500, which is much more limited than because we have already come down a lot and because of sell-off in tech and other related highly valued securities.
Krishna, I also want to talk to you about another looming uncertainty, especially over markets this morning, which is the independence of the Federal Reserve. President Donald Trump was asked about this on Thursday.